Welcome back. The government just released a report on overall economic growth for the first quarter of the year. CBS News business analyst Jill Schlesinger is here to explain the numbers. She knows it all. She's the expert on this. And we turn to you and say, how did the economy do in the first 3 months of the year?
Well, we saw an expansion, so we like a plus sign. That's always good news. We expanded at a rate of 1.1% on an annualized basis. Now, here's the thing. It is slower than what people thought it was going to be. But inside of this report, really interestingly, what was the powerhouse behind the growth at all? Consumers, us. Oh. And we've been complaining, oh, it's inflation or job cuts at different places, right? But consumers consumed at a really big clip, 3.7% annualized rate, up from 1% in the previous quarter. So it was really the consumers that kept us afloat in the first quarter. There is some concern that maybe there was a lot of spending, say, in the first half of the quarter through the middle of February, and it might have petered out by the end. We'll have to see. But, you know, look, growth is better than contraction, and consumers being okay and being able to spend is not bad news.
Yeah, it is expensive, though, at the grocery store. I wanted to ask you about the Federal Reserve meeting next week. How does that factor into the central bank's decision on interest rates? They're so high now for people like trying to get a house or what have you.
Yeah, absolutely. It's interesting because also inside this report, there's a measure of inflation also. Kind of says like this index that measures price increases. And, you know, even though growth is slowing down, you might say, the Fed's not going to do anything next week. Yeah. But I think they're going to focus on that inflation part, which is still high and actually expanded in the first quarter from the fourth quarter. So I think we are on pace for one more 1/4 percentage point increase next week at the Fed meeting. Don't be surprised. It's probably the last one, though, maybe of this whole rate cycle. So we could get out. But, you know, if they do a 1/4 point, we're at 5 to 5.25%. Shocking. That is the fastest pace of increases that we've seen since the early 80s.
Wow. I mean, it really is so rough for so many people. Does this report make a recession more or less likely? We're hearing that R word lately.
Yes. I mean, look, I think that there is something to take out of it for each side of that equation. I think what's clear is that these higher prices are slowing things down. And it is possible, and maybe even likely, that by the end of the year, we have slowed down enough to be in a technical recession. But even without that, even if the National Bureau of Economic Research does not say, oh, recession started here and ends here, it's going to slow down enough to be meaningful. And so I like to call it a slow session. Like, even if it's not a recession, we are slowing down. That is clear. Whether we technically go into it or not doesn't matter. You should prepare for a slowdown, beef up those emergency reserves, try to pay off your credit card debt, because those are the things that help you get through a recession.
Yeah, so the worry is people might lose their jobs.
Exactly right.
Oh, all right, Jill, we so appreciate it. Thank you so much. So great seeing you. And you can see Jill regularly on CBS Mornings and the CBS Evening News with Nora O'Donnell, and sometimes she comes and pays a visit to here at CBS News, so thank you so much. And you can also go to JillOnMoney.com to get more information.